Today, traders have ignored a bulk of macroeconomic events. They are still focused on the US inflation report that was unveiled yesterday. In fact, it's good for both the euro and the pound sterling, since the Eurozone statistics was below the forecast. Thus, the UK GDP advanced by 22.2% after a drop of 6.1%. Of course, such an impressive rise was caused by the low base effect. In the second quarter of the previous year, the UK economy contracted by 21.4%. That's why the recent report unveiled such figures. Nevertheless, economists had foreseen a bigger jump of 22.5%. At the same time, the UK industrial production showed even a worse performance. The indicator's growth slackened to 8.3% from 20.7%, whereas analysts had predicted a rise of 10.8%. The slowdown should not disappoint market participants, as it was mainly caused by the low base effect. That's why annual figures are uninformative. Nevertheless, industrial production was expected to inch up by 0.5%, but it slid by 0.7%. In other words, the UK's economic recovery is not confident. The situation in the Eurozone is almost the same. According to the forecast, a rise in industrial production should have slowed down to 10.9% from 20.6%. The final data unveiled that on yearly basis the indicator advanced by 9.7%. On a monthly basis, industrial production declined by 0.3%. As we have already mentioned, the market has ignored the data. The fact is that all the reports, including the UK GDP data, are of minor importance. Traders are waiting for the US unemployment claims figures that may boost the greenback. Thus, the number of first-time claims may decline by 20,000, whereas the number of continuing claims is expected to slide by 80,000. It means that the labor market situation is confidently improving. Notably, the recent report provided by the US Labor Department unveiled an unprecedented drop in the US unemployment rate. The labor market condition is a much more important indicator of economic stability than inflation. Thus, the market will hardly brush aside the reports. What's more, the US dollar may gain in value amid such figures. However, the growth could be capped by the US Producer Price Index data. The indicator may show a more rapid rise, thus pointing to further inflation growth. Notably, connection between the indicators is not direct. Let us take a look at the trading charts. The euro-dollar pair decreased to the lowest level locked in 2021. The level of 1.1704 acted as support and led to a drop in the volume of short positions. As a result, the pair stagnated and then rebounded. If the price fixes below 1.17, the downtrend is likely to continue. An upward movement will take place when correction replaces a pullback. The quote should consolidate at above 1.1770 to reach the area of 1.18 and 1830. Meanwhile, the pound-dollar pair failed to break the support level of 1.38. As a result, it rebounded. Now the level of 1.39 is acting as resistance. However, if the price does not consolidate above this resistance level, it may drop back. And that's all for now. We wish you profitable deals. See in our channel with a new video in a couple of hours. We will take a close look at the US trading session.